So I hope that you had a nice lunch and that you enjoyed the breakout groups. I have to say I was walking through most of them, listening in from time to time, and it was really interesting to hear all the different experiences being shared. And I at least had the feeling that there was a lot of very frank discussions and energetic discussions, and I hope that you enjoyed them and got something out of them. And now we want to see what the results were. For that, I would like to introduce Denise Garcia. Denise is a senior advisor at the Financial Stability Institute, and the FSI is an important partner of the A2II. We often collaborate with them on a number of initiatives. Denise was General Director of Research and Development at the Mexican Insurance Supervisory Authority, CNSF, and besides contributing to the insurance framework of the Mexican fintech law, as well as to other innovation initiatives, Denise was really a driver of financial inclusion within CNSF.
Thank you very much, Anke. Well, thank you very much, first of all, for the invitations, and congratulations again for the anniversary. It's a pleasure and an honor to be here and to conduct this plenary session. We have 30 minutes to present the results of the discussions. So I'm looking forward to your participation, and we will use the Mentimeter tool in order to have like a lively discussion of the topics. So the objective of this session is to share the results of each breakout session in order to identify the challenges and some key recommendations for regulating inclusive insurance. We will organize the session as follows. First of all, we will begin each discussion of the topic with an open question. So if you could please log on to Mentimeter, menti.com, and input that code, 746557. And we'll begin each group discussion with this open-ended question. And then each of the groups will present. They will have more or less 5 minutes. And we will wrap up with some relevant key recommendations for each topic. So in order to begin the first question, we will begin with monitoring the market breakout session. And we would like to know which is the major challenge that your jurisdiction faces in data collection. We have different options. Only select one, please. Okay, let's wait for more participants to join. We want to close with 20 results. It seems like shortage of resources. It's the major challenge that jurisdictions represented in this room face. Okay, we'll close in 20. Okay, thanks. Well, there seems to be two major challenges: shortage of resources and poor quality of data. So let's see what our group results are, if the recommendations are focused in this area. Could please the rapporteur from the first group come and share the results?
Hi, everybody. My name is Abdelrashid from Ghana National Insurance Commission, and my group worked on monitoring the market. We had a discussion on what regulators need to look out for in terms of data collection. And we as a group decided that, or we discussed that every regulator would need to know exactly what you are going to require the data for. So you have to decide what you want the data to be used for, whether it's for prudential reasons, market conduct reasons, or for market development. So in looking at this, you need to start with existing data. The existing data could be from insurance companies. It could be from other non-insurance companies such as mobile network operators or microfinance institutions, and any other relevant data sources. So you look at the existing data, and then you conduct gap analysis with the data you have discovered. The gap analysis will reveal whether the existing data is useful or not. So if the existing data is not useful, then we recommend that you invent an appropriate means of collecting relevant data that can help you to do one of these three things or all of them. And then what we also recommend is that firms that are able to produce good quality data, you provide incentives for them by publishing their data. And in that way, investors who are interested in the published data can get in touch with the companies. So that will serve as an incentive for publishing very good data. So we also look at the don'ts, the things that you don't need to do as a regulator. So you have to avoid unnecessary data requests from the companies. For instance, you don't just say, I need data. So you just ask the insurance companies, give me this, give me that. You need to be circumspect in the data requests by asking for relevant data that will be able to guide you to make decisions and develop your market. You also need to impose disproportionate sanctions in that you don't keep your sanctions very high, as it may deter companies from doing microinsurance, because when the sanctions are very, very difficult for them, they will just say, okay, you know what, we are not going to do microinsurance again, and then they stop. And for new companies who want to now start collecting data from insurance companies, you don't have to expect too much from the companies. You have to be realistic in the amount of data that you collect by not expecting too much data. For instance, you can be progressive in the data take-up. You start with a certain level and then you move by integrating the companies into higher forms of data requirements at the beginning. So that was our findings with recommendations and don'ts.
Thank you very much. Thank you very much. I think that very interesting points, and also in the future, I think that now more technological tools will help us analyze better the data that we have previously identified that we need, and the quality that we have to verify that the information is consistent and is in ways that we manage to benefit from the outcomes of this data. So I would like to ask all the audience, from the key recommendations that this group gave us, if you could please rank them in order of importance for your jurisdiction. The first recommendation is that regulators need to identify their data needs. The second one is that they review the existing data available. Then to conduct a gap analysis. And the fourth recommendation was to reporting incentives or communicate the purposes of why this data is relevant for the regulating and supervision of their market. if you could please rank in order of importance these recommendations. It's interesting to see, for example, you would think that the results would show some trends, but right now it's between reviewing existing data and gap analysis, it's very close. Okay, so the key recommendation in this area for all the audience here in this event is that identifying data needs is the most important recommendation for supervisors. So this will also help regulators in each of their markets focus if they need to review if their data needs are inconsistent with their data requirements and their reporting requirements. So we will move on to the second topic, which is small and medium enterprises. And the general question, yes?
Okay, I'm Fangman from SIMA. I've got two comments. The first comment is that we regulators are collecting data, information on some purpose that are written on the border. But it's important that the industry of insurer share also those objectives. If they are producing data just for the regulators, they will not be insight to produce data of quality. They must share the fact that it's important also for them to use those data and to be able to monitor their business daily. And this is an important fact. The second comment is that it's important when you receive data to have a feedback automatically to the insurer in order to say this data is correctly reported or it's not correctly reported. If the feedback is done immediately, you've got the possibility to improve the quality of the data in the time. But if you don't report the feedback automatically, you may have the bad data for a long term. So it was my two comments.
Thank you. Yes, absolutely. You have to verify the consistency. And in some countries, even, for example, in Mexico, we had sanctions if the data had not the quality or the differences were huge enough, so to modify the analysis that the supervisor makes with this data. So coming to the small and medium enterprise, I'm sorry, but because we have only time left, I would ask participants to be brief. So if you could please present the group on small and medium enterprise. The first question would be for the audience to only provide a word of the main barrier for small and medium enterprises to obtain access to relevant insurance. So for some participants here, the knowledge, I don't know if the knowledge of the needs of the small, medium enterprises or knowledge of the options available. Lack of products is one. Awareness, literacy, lack of regulation, distribution problems. I think awareness is one of the most important and relevant barriers. Cost is a very important factor. simplicity, understanding needs, flexibility, trust. Very interesting barriers. And regulation, it appears not to be one of the most important barriers. It's a very interesting result. So could the representative of this group present the results?
Certainly. Does that work?
Yes.
Hi, I'm Gregor Sala from GIZ, for those who don't know me yet. I have the pleasure to present, as a rapporteur, the outcomes of our discussion, which was a very rich and lively discussion, which is very good, but on the other hand, it's quite challenging for a rapporteur then to kind of summarize that adequately. So we agreed that if I miss out on something, that the group will jump in. We were also quite a big group, I think around 20 people. I think as you have seen here, and that small exercise is, that most barriers that came to our mind also during the discussions were not directly related to regulation necessarily. So we did have, or we did spend a large part of the discussion on things not directly related to regulation, and to sum that up very shortly, I think at the beginning there was a bit the feeling that there's a predisposition that regulation prevents serving SMEs with insurance products, and that this is somehow not right, because the industry could actually serve them if they just wanted to. So we also learned that at least the regulators that were in the room, most of them said that they have no specific policies for SMEs, either in their regulatory frameworks, nor that they know of any provider actually serving SMEs with specific policies designed for them. So that's how we ended up with quite some, well, let's say recommendations more directed towards the industry than actually to regulators. Among them, I think the trust issue was mentioned here. So one issue is that there is a trust gap, much as in normal microinsurance, but maybe even more pronounced when we talk about SMEs. But there are ways to gap this bridge. For example, we heard one example about digital platforms and how actually one of the mostly used financial services and some of these attached to some of these digital platforms are insurance, because the customers may not trust insurance so much, but they do trust the platforms. Another issue that was raised is that insurance is part of, or should be part of the financing angle, because what most SMEs are demanding is actually credit for working capital. And that's also then, let's say, a part where insurance could play a role. And therefore, while increasing access to that part of financing would also mean you could increase access to insurance. Yeah, and we had, I think, long discussions about better understanding the needs of not just, let's say, the customers. So often there's a perception that the customers just don't understand insurance, but I think it's also the other way around, that insurers do not necessarily understand the actual needs of SMEs. That brings me to the actual recommendations we came up with for regulators. I think there are 5. You can already see them here.
Yes.
So the first one is engage with stakeholders, including policymakers, and that's where we believe regulators can play a role, and there are some examples where they do. And I think I have to underscore the policymakers part here, so they can be a real game changer to actually put it high on national agendas. Secondly, my sequence is a little bit different than what's there on the board. develop a strategy to serve specific segments of SMEs. So that was a point I think raised from Brazil. That also depending on the specific mandate of the regulator and on the specific state of the market, it makes sense or it may make sense for the regulator to get quite strongly involved to developing the market, for example, even drafting strategies to serve specific segments of SMEs. Thirdly, with that, I think here we call it create awareness, and that's, let's say, a very abbreviated phrase for not just providing financial literacy, because that would again be the notion that it's just the people who don't understand insurance, but that's only one part of it. It's also the insurers who often do not understand the actual needs and demands of the SMEs, let alone the perceived needs of them. But also thirdly, it's a lot about risk management and so to say risk management literacy, where SMEs often face difficulties to actually understand the risk that they are facing and which risk actually would have a large impact on their business. Fourth recommendation would be to review the existing regulations for unintended barriers to develop the SME market, because we heard that at least for those regulators in the room, there are no specific regulations directed at SMEs, but there might be regulations that come with an maybe unintended consequence that it actually creates barriers for SMEs. An example would be if there are, and in some jurisdictions there are, so none of them were in the room, but I know there are some, for example, that have rules on how many distribution partnerships you can have, and there are examples that you can only have 1 or 2 distribution partners as an insurer. There are some regulations preventing, for example, partnering with MFIs, things like that. And that, as a side effect, can negatively impact on the creation of an SME insurance market. And lastly, I reframed it a little bit as allow creative partnerships. That's also hinting at distribution, because I think insurance for SMEs is a lot about distribution. And the few cases we do see that have successful products in the market are often very creative about their distribution channels. And it's also important there to align the interests of the distribution channel, the insurer, and the SMEs. And therefore, you also have to allow, from a regulatory point of view, to create these incentives.
Thank you very much.
Thank you.
And very interesting results also if you look at the first relevant key recommendation is to create awareness. Well, it was to create awareness, but it's more or less related to engaging stakeholders. And I think that for this particular topic, communication, it's, I think, the most relevant action that we as supervisors need to enhance in our markets. So thank you very much. And we go quickly to our third group, because we're more or less taking time from the next session. The general question for this topic is if you are aware of any climate and disaster risk solutions in your jurisdiction. And if you could please come here and share your results of your group and your discussion. Thank you, Andre.
Good afternoon, everyone. Okay, I'm going to be, well, I'm very conscious about the time, so I'm going to summarize very quickly the findings. So as you see, the question was like what supervisors could do in order to reduce the protection gap on climate risk insurance. So we have basically 6 do's and 5 don'ts. The first do is like be a champion of insurance. we know that nowadays a lot of ministries of agriculture, environment are like moving forward with insurance solutions. So it's very important that the supervisor authority is part of it, that they effectively engage with them, and also they create this kind of awareness about the role that insurance could play as well in order to help them to achieve their public policies. So it's like be the champion of insurance, but at the same time be proactive and check what others are doing in their countries. We discussed cases in India, in Bangladesh, and other countries where actually the insurance supervisor is the last entity that is aware about an intervention that, for instance, the Ministry of Agriculture has been designing. So that kind of situation shouldn't happen. The insurance supervisor should be included and be proactively included in these discussions. The second point that relates not only to the discussion that we have in our group, but also relates with a survey that the A2II carried out at the beginning of this year with private entities that are aiming to design these kind of solutions in the market, is that supervisors unfortunately don't have the skills and the capacity sometimes to deal with the innovations of these type of products. So one of the do's is like try to arrange options in order to build that capacity. And here the A2II could play a very important role, but also supervisory authorities should be more proactive in looking at the international and global level, what else they could take from other experiences around the world. Something as well that we discussed is that once they have built their capacities, they need to really disseminate those capacities with other public entities like ministries of agriculture, environment, and so on. The third do that we identified is that it's very important to focus on understanding risk. They know that the private sector have data and knowledge that could be very useful in order to support other endeavors that are currently in the government, for instance, with disaster risk reduction entities that need models in order to support and to create these vulnerability assessments and so on. So how the supervisory authority can enable the risk understanding, the improvement of risk understanding in the country. And also, not only focus on insurance awareness, but maybe raise awareness about risk management in general. So it's not only insurance is just a piece of that puzzle, so it's very important that supervisors are aware of that. Then the fourth point is related more with the incentives and having this proportionate approach in terms of regulation that we have discussed yesterday. During that survey that we carried out at the beginning of the year, some practitioners mentioned the possibility of having mandatory insurance, maybe reducing some taxes that effectively are not very appropriate if we want to design affordable products and so on. So there is a list of elements that were mentioned as well. The allowance of index insurance was mentioned. The fifth do will be, well, is related with gender. So we know that there is evidence that women suffer like largely because of climate change. So it's very important to design solutions that are very focused on gender. So how to adopt an approach that will be very holistic in that respect. And lastly, in terms of do's, enable public and private partnerships. I think that is something that as well was mentioned for SMEs. Maybe very quickly in terms of don'ts. So don't underestimate that every intervention should be sustainable. So that's key, because sometimes we think that a subsidized intervention for a couple of years will be positive for the market, but actually these solutions could be harming the market and the trust in insurance. So think about the business case for the insurance industry. Also, try to be an enabler and not a blocker. Sometimes these innovations are very innovative and require like an open dialogue instead of like taking a very conservative approach of like not even listening these what the industry is aiming to design. Something very important as well, don't overlook informality. And I think that is something that we have been discussing between yesterday and today. Ultimately, there are a lot of entities, a lot of community-based organizations offering insurance-like products, and this is something that is happening in climate risk. So how can we enable, how can we make sure that these informal mechanisms are formalized in a proportional way? The fourth don't is like, don't copy what others have done. Effectively, you have to learn about what others have done in other countries, your peers, but don't try to copy and paste a regulation, because that will never be appropriate. You need to understand your market, you need to do an assessment, you need to know what are the risks, and based on the risks, you take the proportionate measures. And the last one, don't ignore the impact of pilots. If you are in a market where there have been like 10, 15 pilots on climate risk insurance, the industry could be quite discouraged because they have seen these pilots that have been shutting because they are unsuccessful. So that creates a sense that these solutions are not relevant. Also, the government start feeling like this kind of mistrust in insurance, and something that we found, and I was discussing particularly for the case of Bangladesh, it's like even clients feel very disappointed of having like a product in the market for a couple of years, and then when they needed that product, it's no longer available. So those are like the do's and don'ts.
Look at thank you. Thank you very much. And I think that, well, it is very important and very related to increase the awareness on risk management practices, and also to enhance and create new partnerships, public and private partnerships for the management of these kind of risks. So our last topic would be InsurTech, and we would like to know in which areas are innovations being developed in your jurisdictions, because we see different kinds of types of insurance being developed right now by InsurTechs or by traditional players partnering with technology providers. We have seen developments in mobile insurance, peer-to-peer insurance, distribution platforms like being comparison platforms, tools, or also online distribution schemes, parametric insurance, and other types of insurance. So mostly, how would be the innovations in jurisdiction distributed in these kind of areas, or is your market developing other types of innovations? So if you could please start sharing your results, and then we turn.
So I kind of, just for my group to know, I've kind of summarized our points into kind of 5 do's and 5 don'ts to kind of fit the voting structure. So firstly, regulators do learn before you regulate, and then we shared the example in the group of Ghana where they basically observe developments in mobile insurance before kind of, taking the step to issue mobile insurance regulations. Secondly, do cooperate with other regulators from banking, telco, capital markets sectors. So Kenya had the example of a sandbox that the capital markets regulator also sets up. Thirdly, think about the business model details and the anachronistic regulatory requirements that might kind of apply to and potentially impede or encourage these models. So the examples we shared were things like KYC requirements, requirements relating to wet signatures and digital identification, paying via airtime. Because the conclusion, the observation that we made in the group was that every extra step to enrollment for insurance is a disincentive to buy insurance. And then communicates regulatory stance and requirements clearly to the industry. Firstly, for the industry to, of course, understand what the requirements are, but also to avoid the misperception that the regulators are, applying requirements in favor of any particular company. And also to avoid the misperception that the regulator is not open to innovation or that the regulator has a can't-do attitude. And then also another important one, also do understand your markets. So understand the market context in terms of the culture, whether people are more familiar with, or whether rather people would prefer still to have some kind of face-to-face interaction as opposed to digital processes. Also, and how does that tie in with your regulatory objectives? Another one that's not on the list is also an important one, but it's more from the government's point of view, which is that it's also very important to have political buy-in and kind of government drive to drive innovation as well. In terms of don't adopt a can't-do attitude. So what we heard was that a regulator should start from a blank piece of paper. Don't come into the room with a paper already saying you can't do this, you can't do this, you can't do that. Or requirements, a list of requirements. Secondly, don't commit to a sandbox without really thinking it through. The details, whether you have the resources, whether it's a timely intervention. So do consider things rather an intermediate solution, potentially something like a thematic sandbox, so it's a bit narrower in scope and easier to handle. Or just thinking about things like the regulatory attitude and mentality. An example we shared was about how China has really seen an explosion in innovation, but did they have a sandbox? We're not sure. Third is also to not have unrealistic expectations. So when it comes to things like claims ratios, there will be people who will not receive a claims payment, and regulators will have to kind of figure out how to balance that. Another one that was also overlaps with Andrea's point earlier, don't copy and paste. But I think in this sense, we were talking about don't copy and paste innovative solutions, because what works in other countries might not work in your country. And don't charge ahead or kind of over-focus on innovation for the sake of innovation. It works better for the industry if you streamline your regulations instead, rather than to issue a whole new regulatory framework. And also prioritize. So for example, if your market fundamentals need to be fixed, solvency issues, things like that, do you want to do that first, or do you want to do innovation, or can you find a way to kind of balance both at the same time?
Thank you very much. From the question that we had previously, distribution platforms were the most developed innovation in the jurisdictions represented in this audience, and it is consistent with a global trend right now that almost all innovations in insurance are focused on distribution business type models. And in regards to the key recommendation, I think it is very clear that we as supervisors need to learn before we regulate. And in this sense, the capacity building and the help that we can get from other supervisors and from the experience from other supervisors, and also reading, there's a lot of material, consultation papers and lessons learned, for example, from the UK, from different types of technologies and from innovations, is very important for us before we even get to understand our market. So thank you very much. It's all for me, and it was a pleasure to share with you all the results. Thank you.
Thank you very much, Denise. I think there were some really interesting recommendations and insights here, and we'll be sure to capture those and disseminate those to other supervisors that couldn't be here today.